You are listening to The Vocal Technologist. Spoken Tech for your ears.
Okay, let's get into it. There's a truly massive shift happening in finance right now. It's hard to ignore. We're seeing these fascinating moves in crypto, really significant new laws coming into play, and maybe most surprisingly, the big traditional finance players jumping in, like really jumping in.
Full throttle.
Exactly. So the big question is, what does all this really mean? For the future of finance and, well, for all of us.
That's really what we want to unpack here today. Sort of cut through the noise, look at the source material, and pull out the key insights for you. Because understanding the implications here,
Right.
well, it feels pretty crucial. Things are definitely changing shape.
Absolutely. And maybe the best place to start is with the money. Some pretty jaw-dropping numbers just came out.
Right.
Crypto investment products, they saw a record $4.39 billion in weekly inflows. That's billion with a B.
Which is the highest ever recorded in a single week by CoinShares, right?
That's it. And it pushes the total for 2025, just year to date, to $27 billion. Just staggering. But here's what really caught my eye. Ethereum actually led that surge. $2.12 billion for ETH.
Yeah, I saw that. It's 13th straight week of gains, too.
And a personal best for a week. It even brought in more money than Bitcoin overall during that period. What do you make of that?
Well, I think it shows these huge inflows aren't just about Bitcoin anymore. It really highlights, a broadening risk appetite. Investors are looking across the sector. We saw money going into things like Solana, XRP, even SUI. It's not just the big two.
So wider confidence returning, perhaps?
Seems like it. And it's heavily U.S. driven, too. Those U.S. funds accounted for almost all of it, like $4.36 billion.
That wider appetite seems to be exactly what's pulling in the traditional giants now. Like Charles Schwab. They're planning to launch spot Bitcoin and Ethereum trading. Soon, apparently.
Which is huge news from a player like Schwab.
It is. And their goal seems pretty clear. Capture that slice, maybe 1 or 2% of their clients' crypto that's currently held at, the pure crypto firms.
Right, bring it in-house.
Yeah, the CEO, Rick Wurster, basically said it outright. They're aiming to compete with the crypto exchanges. And they're seeing the demand traffic to their crypto info page is up 400%.
And it makes sense when you look deeper. Schwab clients, they already hold something like 20% of the crypto ETP market.
Exchange-traded products, yeah. So the traditional wrappers for crypto.
Exactly. That's about $25 billion just sitting there within their massive $10.8 trillion asset base.
Yeah.
So the demand is proven. And this move comes right as the regulatory picture is getting clearer, which fits a bigger trend. We're seeing stats like 83% of institutional investors planning to increase crypto holdings in 2025.
83%.
Yeah. And it's not just trading. Look at Ahav DAO, a big name in decentralized finance. They just approved a plan to offer institutional lending using something called Ink Layer 2. Ink's even putting up $250 million to get it started. So institutions are coming in multiple ways.
Okay, so massive inflows, big institutions moving in. Let's switch gears to the other huge piece, the legislation.
Right. This is a critical context.
We saw President Trump sign the Genius Act. And interestingly, Ethereum's price jumped about 45% in the 2 weeks after that news broke.
Yeah, the timing is notable, and the Genius Act itself is really significant. Its main function is legalizing fully backed stablecoins. But crucially, it also kind of cements Ethereum's role as the primary place where these stablecoins will settle transactions.
So it's less about hype and more about plumbing, like core infrastructure.
That's the argument. The source material frames this not as just another crypto boom-bust cycle, but as a structural shift, a blockchain financial services cycle. Because it's tied to real infrastructure use and now clear rules, Ethereum becomes sort of foundational.
And it wasn't just Genius, was it? There were 3 major crypto bills passed in, 24 hours?
Unbelievable speed, yeah. Genius, the Clarity Act, and an anti-CBDC bill all at once.
And the source we looked at called this the most consequential moment in financial services law since Dodd-Frank in 2010. Maybe even the biggest change in financial tech since digitization back in the 70s. It's quite a statement.
It is a very strong statement. But you can see why they'd say it. The Clarity Act, for instance, tackles that thorny issue of who regulates what, SEC or CFTC.
Ah, okay. Finally some clarity there.
Hopefully. And it also enables tokenized securities. So think digital versions of stocks or bonds on a blockchain.
Right.
So taken together, these bills are seen as, well, unleashing adoption, making it easier and clearer for banks, for Fortune 500 companies to get involved. The idea is that wrapping assets as tokens makes them instantly global, programmable, replacing the slower, siloed systems we have now.
And the big banks are already moving.
Oh, yeah. Names like JP Morgan, Bank of America, Citi, they're all positioning themselves. They see the potential and probably the threat, too.
Now, we should add a note of caution here for balance. Senator Elizabeth Warren, for one, warned that even with these new rules, the Genius Act might still leave consumers vulnerable to manipulation and fraud.
That's an important counterpoint to include. Regulatory frameworks are rarely perfect right out of the gate.
Definitely something to watch. So pulling this all together for you listening, what we're really seeing is this powerful mix. Huge amounts of money flowing in, the big traditional players finally embracing crypto, and landmark legislation changing the rules of the game.
It genuinely feels like it could reshape finance as we know it.
It really does.
Which brings up some interesting questions for navigating this. For example, there's this idea of a late cycle market strategy, basically protecting your capital, but making very selective, high conviction bets with what's left. How might that apply here in this new crypto landscape?
That's a good question.
Or, thinking about the potential downsides, the scams or manipulative schemes that still exist. What are the really vital, critical thinking skills you need right now to sort the signal from the noise in this evolving space?
Yeah, really important things to think about. We definitely encourage you to keep digging, keep learning, and stay engaged with these developments. They feel pretty pivotal.
Spoken Tech, for your ears.